You have questions, we have answers. This is Jane Muller.
And this is Ken Muller. Welcome to our show, all about real estate with Ken and Jane. Today, Jane, the topic is going to be Chairman Powell's speech this past Wednesday. We're going to break it down and talk about he addressed a couple things. He addressed the banking industry, starting with the Silicon Valley bank collapse, SVB Bank. So we're going to break that down. Then he addressed the inflation issue, and then he took a Q&A. And then we're going to tie that all in to our current central market. Sound like a plan?
Yes, Ken. To be honest with you, you know me, always running around a client appointment, showing the house, meet a client, open the doors, township inspection, so on and so forth.
Yeah.
Water reading too, right?
Yeah.
But recently, I always have to spend an hour every morning to listen to all the news about the financial and everything, because that's definitely impact on our job much more than before, the interest rate and the whole economy.
Yeah.
Yes.
And you know the famous saying that life is always changing?
Yes.
Well, we can apply that same thing to the market is always changing.
Yes.
And who knows? Nobody really knows what's going to happen.
Exactly.
That's the whole thing. All right, so let's talk about the Silicon Valley bank collapse. Chairman Powell said that the SVB Bank was a outlier. He used that term outlier, meaning it's not indicative of the overall the broader financial market, which he said remains sound and resilient. All deposits are safe. The Fed went overboard and they insured all the non-FDIC insured deposits, I guess. And he said that was necessary to give a level of to quell the fear and not prevent the contagion from spreading to the broader financial institutions. The reason for the collapse, he said, well, it looks like that bank had poor management, it grew rapidly, and there was excess liquidity. So, but he said currently the Fed is doing an ongoing investigation. They're going to have more information. One of the vice chairs is heading that. And once they get all that information, they'll review it, implement policies to further prevent that from happening again. So they're always improving, looking for new ways.
I have to say, I'm sorry to interrupt, Ken. I mean, go back to my bank days.
Please.
I was a bank manager, and I had a master's degree in finance. I remembered in a college, professor said, the cash flow and the cash flow. A lot of great business fell, not because they don't have a good business, not because they don't have a good people, not because of anything, but just liquidity, the cash flow. And unfortunately, this has just happened, one of the examples. I know nothing about this, not much about this bank, except I hear from news. It seems to me they had a lot of good client base. They are very solid bank, just the cash flow issue. Once again, that's
and that was due to poor management, which it comes down to because they let
that. Yeah.
Right. And Chairman Powell's facing a little bit of criticism, some backlash for his statement where he said that we went above and beyond to ensure all the non-FDIC insured deposits. A few of the economists are saying that that's beyond the scope of his jurisdiction to do that. That has to be an act of Congress through the Dodd-Frank. So
I think he just wants to calm down.
I think they're looking. Yeah, you're looking at that's probably the best way to look at it to ease the people. Otherwise, you're going to have this pandemic. This fear
people
spread.
People are going to line up, to the bank and try to withdraw. The deposit.
And he did say that. He said that was done to prevent the contagion. He used that term from spreading throughout the whole system and creating that widespread, fear, unnecessary fear and thing. Or he said a risk of contagion spreading to other banks. He likes to use these very elaborate phrases, which I know that's why I don't want to misquote him. Risk of contagion.
You need a law degree to understand.
Yeah, he's very well spoken. The speeches are very well written. I mean, they're very he's acutely aware. That comes up later in the speech when he talks about inflation, the pain and suffering. It's almost written like a court. Some of the judges that he writes it like he's really. You can tell he's highly. Whoever writes that is really just crisp in their verbiage. So
Ken, as a resident or as a person, a citizen here, we don't want the fluffy things. We just want to know our money is safe.
Right, but sometimes when you listen, that's why I think it's a lot of times when these economists talk or even doctors talk, they don't put it in plain English.
Yeah.
You want to know, but his, if you have to listen carefully and then decipher what he's saying, but he uses, I think it was pretty down to earth, his speech. But, sometimes when economists speak, they speak about all the different variables and terms, and you get lost in you want to see the forest for the trees.
Yeah, they said, when I was a kid, I was taught by my English teacher, what's a good article is when you read to your grandmother, she could understand. That's
right.
a good one.
And that's a good sign of understanding something when you can explain it in simplistic terms.
That's
that means
right.
you really understand it.
Yes.
The last thing he said on the banking issue is that with the recent collapse, he said the banks are going to probably further tighten their credit. I think it's already been fairly tightened since subsequent to 2008. But the tightening of the bank's credit could help his job in reducing inflation. So the Fed may not have to work as hard in the future because the banks will institute further tightening mechanisms in response to the SVB bank collapse.
And I read through that. I think as a woman, my sense is telling me he probably going to stop increasing the rates soon.
No, he didn't say that. He did.
I know he didn't, but what if what I listened to that speech and say, hey, basically bank is going to tighten up, so that's going to help inflation. So therefore, no need for him to increase much higher and much frequent the rate to do that because the bank already did that job for him.
Right. So his speech wasn't done in this order, but I just kind of categorized all that about that's what he had to say about the bank. Again, he wanted to say that the banking industry, the financial industry remains sound and resilient. It's strong. He used those words repeatedly. And then speaking about the Fed, as expected, the Fed raised their interest rates by a quarter point. He stated that inflation remains high. We have made progress, but there's still more work to be done.
I think it's really, I feel sorry for anyone being put that, either the treasurer or him, right, at the Fed. It's in a really hard situation here, right? That there's two voices in the market. One said, look what you did. Look what you did. You wait too long and did nothing. And then you saw the problem coming, such a big problem. So you raise the rate so fast and so high, right? And then cost this. So you should stop. That's one, kind of voice. The other voice is say, the inflation is a bigger problem we have. So in order to curb that, we really have to sacrifice something today in order to have a better future, so we should keep increase. So I think that both voice out there. So for Fed, probably take the middle road. It's not bad.
I think what he's saying with the inflation is that he said they're strongly committed. That he used that phrase, which is very nice modification. Strongly committed to bringing inflation down to 2%. He kept mentioning the 2%. I didn't count the number of times, but repeatedly. And the challenges we have, he referred to the jobs market. He said the last 3 months, we've created 351,000 jobs each of the last 3 months. The unemployment rate remains very low at 3.6%, and the labor demand exceeds the supply. So the economy is vibrant. So when the economy is vibrant, you can't find workers to fill some of the job demands. That's what
once Ken, that's really we get conflict information here, right? One side, as he said, as well as a lot of our clients, that they can't find the workers, right? But on the other hand, you read a lot of things, a lot of people lose job. But I think it's it's just natural. Remember, long time ago, they were, replace the machine. Replace the people with machine in the factory. They become a lot of workers lose job. But I remember we took our nephew to see the first movie he ever saw, the Charlie Chocolate Factory.
Willy Wonka.
And then the little boy's father lost his job, and they were so poor, so sad. And later on, he learned how to fix the machine, so he got a better job, and they started to have a better life.
I don't know. You remember those things? I remember the things like the fat German kid that got
funny.
bushed by. I remember like that. I don't remember the I remember the funny. You remember like the job. Like,
Yeah, I remember,
and it's Willy Wonka. It's like you remember it's chocolate, and then the kid getting submerged and diving his face in.
No, I remember the how
even
sad
Chairman
the
Powell
family.
would probably laugh at you and say, "Come on, you got to have a little sense of humor, lighten up, right?" Don't.
No, I care about how to put the food on the table. I'm a woman. I care about the kitchen, care about the food, care about the family.
Yeah.
That's my focus. So,
Yeah.
as I said, has been said, right? Like Amazon and all these Google and Facebook, they let people go. But on the other hand, I don't know that's truly reflect on the economy, just like you said, right? They could be just the new things, they may get replaced by the AI. Who knows? So I think the by reading the news itself, what I'm trying to say here, by reading the news itself, we really don't know how's the employment market,
Right,
the
because
labor market goes.
It's deceptive. You don't know what types of jobs are being created.
Yeah.
That could all be fluff and data. It could be, what level of paying
Yes.
jobs they are. Are they skilled, unskilled, educated?
Yes.
Labor. It's just it's just a number, and it looks good on the books to say that.
That's what I meant, because one hand we heard a lot of people couldn't find a good worker. On the other hand, you saw a lot of people lose job. So in IT industry. So
Right.
yeah.
And then with the future Fed hikes, he commented they're going to closely monitor and take a let's wait and see approach and closely monitor the incoming data to see what it shows. So he didn't rule them out, but he did not in this speech use the phrase that there'll be ongoing rate hikes.
Yeah.
So he's open to maybe having. I think possibly one more is the consensus, but they'll have to wait and see.
I think this one, can just like if a person just say very sick, you can see our economy last year, right? The inflation is so high and it's very sick. And when you give the patient the medication, you can't just keep giving. You have to give and see whether medicine work or not. You have to fine tune the medication, maybe different type or different dose, right? I think here the same thing. That's great for the Fed to do that, right? Mm-hmm. To see all these quick, sharp increase and then to see the effect may take a while to show up in the economy. They maybe take a while to show up in the data they're looking for.
Right.
Yeah, so that's why, I think the approach is really welcoming, and then that's much better for...
Then say you're going to give another 8 doses throughout the year, then people are going to have a negative mindset. So it's all about the mindset and keep a positive confidence, right?
Yeah. Mm-hmm.
All right, with that, we're going to take a short break. We'll be right back. Okay, welcome back to our show. So, Jane, continuing with the inflation part of Chairman Powell's speech, he said there's no higher priority than price stabilization. He used this term, now it's where he used it. He said he's acutely aware of the harm that inflation does to individuals, families, and communities. He said inflation poses a great hardship on all. So that's the number one devil in his mind. Regardless of the economy, inflation, you have to stabilize the prices for eggs, for milk, for groceries, just so people can, to make sense of it. And he has committed to that 2% goal. That's always been his goal in all the prior speeches. And I think he said we're at 6%, so we've still got work to do, but we're getting there.
I have to say, we feel it. The egg is so expensive now, especially in our household. We love eggs, right? And even the takeout, sometimes we go to our favorite local deli to get some takeout. One day, only a few items, it's like $92, $93. I was stunned. Oh, my God.
Some, this salad and this potato salad.
Used to be $50, tops.
Yeah.
Now it's a 90-something. I don't blame them. The food price went up, the labor went up, everything went up. So I
even
understand.
the bakery. I went to a local bakery. I like to support a local merchants. Bought like an apple, crumb cake, and it was like $18 for
it used to be much reasonable, but once again, especially for the basic need for the family, right? That's the fact. People, the low income, who we need more because that's a basic. If the luxury goods go up, that's really not a problem because
right, because that's a non-essential item.
Yeah,
right?
but this is the food. That's really every family a must. Yes, absolutely.
Right.
Yeah.
So it was interesting. Did you watch the Q&A too? I listened to the question and answer after the speech, and the reporters there gave him a lot of tough questions and hit him back. They asked him about the commercial real estate loans. They felt that there was some risk of that being vulnerable. His answer was there's no danger at all to that. That was what because there was a lot of speculation. I'm sure you've read that too. That about commercial real estate and that lending practice being more vulnerable with the real estate market.
I'm a little bit. I to be honest, I don't think I agree with that because. Once again, you're the professional real estate agent, the commercial. I'm a residential. But just think about the risk. Just think about from the reasonable, mind of set of mind, right? Here, now the business changing, as you said, it's not good or bad. It's changing. So since the COVID, a lot of companies allow the worker work from home. So therefore, a lot of offices space is going to be more and more available. Now, a lot of people, for the convenience and buy online, that's why the warehouse price went up so much. So the retail, unless your food or experience or something, unique business, a lot of people, the outlet can be replaced by the online. So in generally, that's a too big chunk, right?
Absolutely.
That's the office and the retail.
Couldn't agree more. Office space.
So,
there's articles all over the country, like in Los Angeles, where these big these huge towers, they're in danger of losing it because they're so empty. They're facing challenging times.
Yeah.
The local market for office is very challenging. If you go all around Middlesex County in the center, you see office space. The only thing that's moving really is retail. And what's moving in for retail is still the food, the beverages, with parking. You're getting other types of retails, barbershops, nail salons. But it's the retail. That's
exactly
the necessities, dry cleaning, dog grooming, maybe things. But the office, the office, there's just a surplus of the office space. So that's been hurting.
Yeah. So you're telling me, there must be a big portion of the loan for those kind of project, right? So obviously, it's very easy to understand. They definitely had to have some issues. If nobody rent the office space, and there's no rent, how they gonna repay, right?
Right.
So I think I understand the purpose of this meeting is to calm down the public. I understand it's not a whole economy collapse. No, absolutely not. In fact, I have to say the residential market last few weeks was really thriving. It's very busy.
Let me just finish one thing before his last Q&A. He mentioned another question came up about the fiscal policy. They asked him. They said, Chairman Powell, should the Fed get involved in telling in the fiscal policy, in the spending policy, how the government spends their money? And he rebutted that and said, absolutely not. We don't get involved in that. We have no input, and nor should we, in how the government spends the money, what spending policy they adopt. He said that we will, regardless of the fiscal policy, we will get inflation down to the 2% goal. So he just said we don't want to get involved in it. It ain't our job. So clear out.
I think that's good. Otherwise, too many chefs in the kitchen.
Right. And the last thing he
said, the government to do that.
And the last thing they asked him about their money reserves, he said, we don't see any shortages. So I said, are you going to run out of a reserve? He said, nope, we're not. So now we can talk about real estate. Right?
Don't worry. He can turn on the printing machine. God forbidden.
I think he's got.
Turn on the machine. Of course, he's not going to
him and the president are the only ones that have the switch, the key and the passcode and the key to turn that machine on. No, I'm just kidding. I don't know.
I'm kidding. I'm sorry.
I
was thinking how you need a key. Now, all digital. They don't have to print. They just add a few zeros.
That's to give how far until you say yes anyway, right?
I thought yes. I thought, hang on a minute. Use my brain.
I just made that up.
It worked.
Okay,
it worked.
Good. Now I know I'm successful in that, right?
Yes. I have to say, what that all mean to our listeners there, to the sellers and buyers, right? So far, the market is very stable and actually is very busy. still very lack of inventory. That's make the market very, very desire for the seller. And we had very few new listings come up. We just had a few, but they all had over asking multiple bid. So it's still very, very competitive over there. And the rate from January to now is up and down, right? In January, suddenly the rate came down to mid 5, and then they went up to 6 and 7, came down to 6. So it's all over the place. But I thought that would be really negatively impact on the buyers, which happened last year in June when the rate went over 7. But this time it seems like the buyers immune from that. The buyers
that's
still
amazing.
Come out. It's
me.
amazing.
So
yeah.
on a national level, we just went over the bank. We just had a relatively large bank collapse within the last few weeks. We have another rate hike that was expected. We have high inflation, high lending rates, and yet you're saying that despite all that, the Central Jersey real estate market that you're experiencing. For residential
very
remains
strong.
Vibrant and strong.
Oh, very strong.
Or do you want to say strong and resilient, like Chairman Powell kind of said?
Really,
that's true.
It is. That's why I said it seems to me the buyers, almost not much effect of what's happening with the rate now, which is surprised me because last year it seems the buyer very sensitive to the the rate because the most buyer are payment driven, right? They very much monthly payment driven. They got to qualify because the for the mortgage for the monthly payment. But it seems to me the market from January to now, the 3 months, is up and down everywhere. But buyers, still very, very strong out there bidding. So I mean, the week the bank fell, the Friday, right? That weekend, I couldn't believe it. The Friday, the bank fell. And the Saturday, we had open house. We had 49 families. I'm not talking per person, 49 families, almost 200 people. And Sunday, we have 52 families. They came to the same house, open house, right?
Maybe it's why the people figure, I've got all this money in the banks. I better get that 100, 200,000 I've got and spend it on a house and use the money instead of the. No, I'm just kidding.
You know what? I mean, Ken, it's not kidding. I thought maybe because people feel, why not buy a house? That's when you worry about something, it's regardless it's true or not true. I think our financial is very stable. We didn't do anything with our financial. We think the bank is the bank. The U.S. is strong, but some other people may think better instead of having money in the bank, worry about it. I'm just going to buy a house and have a mortgage. I owe you money, right?
Yeah, that's what they don't have to worry about anything.
So if you're close, you kind of collect it. Well, I don't have to pay, right?
That could be. It could be some effect. I mean, we're not economists, but it sounds logical. There could have been some impulse for people to invest and buy real estate or put that money that they have aside and just figure, well, let's put it in
a real asset.
Put it into real asset because you're not making that money isn't yielding you interest in the bank. And
they do now.
Still
the risk, not a real risk, but a risk in their mind could be offset the high interest each bank offer now. So, so maybe that's why. But regardless, I can't complain.
Yeah,
the market
so that's
really
amazing.
Good.
So 2 weeks ago, right after the bank collapse, you had the attendees equaled or exceeded what you've experienced the last couple of years, which is unbelievable. Now that the interest rates the lending rates for borrowing money are probably more than double they were 2-3 years ago. If you take even 3%, they're more than 6 still. And yet the attendance and the demand, it has to be obviously the supply demand, the lack of inventory is one of the driving things, but there's still a
very strong. And last year went down a little bit from June to December. This year from January, all the home we listed sold. I mean, at the moment, right, I'm having a new listing come up just now this weekend. And, pretty much going to get full over multiple bid because all the listing we have, the new listing we had this year, they're all under contract very quickly with a multiple bid.
But not only that, but the buyers are going back to that stage of giving up some of their rights.
Yes, which is giving up their rights to waive the appraisal and contingency and also more reasonable with the home inspection. So no cosmetic, only the big items. So which is amazing because towards the end of last year, a lot of buyer felt the market went down, so why we have to give up our rights? So there's not many offers come to my desk. They give a full waiver. But in January, it came back again. So in order for you to win the house, and it came back. It's almost, I feel, the market this year, now it's only, March, is pretty much at par with the last year this time. But last year the interest
rates
was only
low.
2.5 that time. 2.5, 2.7, 3. But now it's a more, like you said, more than doubled. But it seems to me the buyer, the drive is like the passion is really equal if to last year level,
right?
Which has surprised me.
And is the buyer pool, you think, typically first-time buyers? Because the one of the things I think is that a lot of people that are in an existing house that locked into a 2.75 or 3% mortgage would not have the incentive to sell their smaller house or upgrade because they don't want to take on a mortgage at more than double the interest rate. Yes. So I think part of that buyer pool would diminish because of circumstances. So, but it's interesting the demographic, or if you know the demographic of the current buyer pool. Is it still maybe first time home buyers that are renters, or maybe
they all
different?
Yeah, they all different. I mean, once again, because the inventory is low. Like you said, right? Inventory is low. So when we have very limited interest, just like at least a very luxury home, 1.4 million, right?
Right, and that's amazing.
And
then
there's so many people want to buy. I mean, quite a few offers came in. Yeah. They all had existing home. They want to trade up.
Yeah.
So, so there's some people from out of state want to move in New Jersey because of education, some because of business opportunities.
Yeah, so some people move because of need, necessity, jobs, circumstances, family. So there's enough of that because the inventory is so low. There's enough of that pool. You still have a pool of buyers that have to move or want to move for other reasons than necessity being the driving force. Yeah.
Yes, the key is low inventory. That's the key. Yeah, that's why keep the market going so good.
Jane, keep the real estate market strong. We're out of time. We'll see everybody next week. Have a good one.
Thank you.